Good morning, everyone. As Edelfried said, we already started this discussion on the future of corporate reporting with the first conference in 2013, as long as 2013, and the 2015 paper was a follow-up from that conference. So I'm really pleased that we have the opportunity today to continue this most important debate on the way forward with, I must say, a very distinguished and senior audience as is present here today. So thank you all for being here. What I want to do first maybe is to go back and start with reiterating what in my view were the big picture underlying developments that we're seeing, the themes behind our discussion, as you like. The first one I want to mention is that we're seeing a changing notion of corporate stewardship, which acknowledges that there is a broader stakeholder interest in the company's longer-term well-being beyond the shareholders. And I guess this has always been part of the European thinking. It has become much more common good today than it was before the financial crisis. What was striking, I was at the International Corporate Governance Network, which brings together a lot of global investors, annual conference in Kuala Lumpur in July. I know some of you were there. And they had a polling question in the room. And one of the polling questions they put up for the investors was, is the shareholder primacy model that prioritizes shareholder value creation still fit for purpose? That was the question asked. And 77% of the investors in the room answered that question by saying they, and that is the investors, they need to think of a hybrid model that seeks to balance appropriate shareholder and stakeholder interest in promoting the long-term interest of a company. Now, I was actually quite surprised by that response coming from the global investor audience. And I think this clearly links to our debate here today, as such a future hybrid model also needs to cater for a broader demand for information. There's not only financial information, but also in particular non-financial information. And non-financial information is not only ESG information, it also, in my mind, includes operational performance metrics that are leading indicators of future value creation. So that's one. Second trend or issue for me is kind of that longer-term value creation stems from many intangible factors. I mean, again, stating maybe the obvious. It's skill sets, it's creative capabilities, it's new technologies, it's management know-how. All these many elements that are not captured and probably should not be captured as asset on the balance sheet. But what we've seen is a growing gap between market capitalization and net asset values on balance sheets. And those the valuations that underlie these market capitalizations are increasingly based on informal information, on unstructured information. That's all not part of our reporting model today. So, and these sources could be press releases, could be analyst reports, could be one-to-one conversations that the company has with its stakeholders, investors, and others. It could be public information, all of which unstructured, as I said. So the question is this actually the most efficient way to organize communications, or should all of this become much more part of a more holistic reporting framework? So that's, I think, the second point that I want to make. The third one is that we see a proliferation of non-financial information, a proliferation of reporting requirements, I should say. Right? And that's in particular with regard to non-financial information. And there is a lack, in my view, of overall, let alone global coordination of the prescription of these requirements. And this has led to reporting overload. Yeah. And you could argue that it no longer meets, all these reporting requirements may no longer meet the need of users, and definitely has increased the reporting burden on companies. So it may actually no longer meet the cost-benefit trade-off. So in response, what we see is that some companies actually are approaching reporting purely as a compliance exercise, and rather than a means of communication. And I think that is in itself a worrying development. On the other hand, to be a bit more positive, we see also a lot of companies that are willing to experiment worldwide in order to improve their corporate reporting. So that's maybe the other part of the equation. And that kind of experimentation is either on the back of new regulations, thinking about the UK, for example, the strategic report, or it's no longer experimentation, but it is. I mean, it is a learning curve, or it is encouraged by regulators, or even on a more voluntary basis. And if you look at, and I think Richard will talk to it later, how many companies are already on a voluntary basis using integrated reporting, it is clear that many companies are willing to experiment. The last of the 5 that I want to mention in terms of underlying developments is the ever-advancing role of technology, which we need to evaluate as to both its threats and its opportunities. I think technology can be disruptive, but it can also be used as a driver and an enabler, as we say in our paper. That's true for changes in business. It's also true for the impact on our corporate reporting model. So we need to evaluate how that's going to impact. So these were the 5 themes, I think, or kind of the bigger picture developments that underlie our first paper on future corporate reporting. As Edelfried said in his introductory remarks, that generated, I must say, a fantastic amount of debate, a lot of interest, engagement. In our conversations, we generally found that people were receptive to the need for change. People agree that we need to think further about how the future should be shaped. But also in that first paper, we only tried to articulate some issues and to launch ideas on the way forward, including the concept of core and more, which I will come to in a moment. But we did not claim then, and we don't claim now, that we have all the answers yet. Maybe far from it. But I see this actually, this whole process as a journey, very similar to how other major reporting developments in history, including international accounting standards, came about. You have to start the debate. And that's also why we need a conference like this, with all the relevant stakeholders that are included in the room here today, whether it's preparers or regulators, standard setters, and the users obviously all represented, to have this discussion. And also as a profession, clearly we are an important stakeholder, I believe, because obviously our role and our future is inextricably linked to the relevance of the future corporate reporting model. So, core and more. Let me then expand a bit on core and more. One of the key ideas in our initial paper was core and more. Top-level executive summary, the core, that then links, enabled by technology, to more granular, detailed information, which we call the more. I think that idea was met with interest, I shall say, but also a lot of questions. So maybe we raised more questions than we answered. So I had a few here. So kind of what is included in the core, and what's included in the more? What about financial statements? Hans asked that question. Are they in the core or in the more? All of it or some of it. How does core and more actually link in with regulatory and the legal environment? For whom are we doing this? Who is the audience, both for the core and for the more? Who decides what's going in there? We got a clear message, not even a question, but an exclamation mark from preparer saying core, but no more, please. That's stuck in the mind. How does core and more relate to integrated reporting, was a question. What are the next steps? So I think all very valid questions, and in response, we at Accountancy Europe committed to do further work with the aim to expand our initial thoughts and in the hope to bring the discussion another step forward. So here we are today. We're launching this Cogito paper that Edelfried already mentioned, and a call to action at the same time, and let me expand on both briefly. In our Core and More paper, we clarified that Core and More essentially is a presentation concept, which it's a presentation which aims to organize different strands of reporting in a more connected, logical, and structured way. So it's really about smarter corporate reporting. That's the objective. So trying to combine the need for a higher level, accessible overall picture of the company with more detailed, granular information that certain stakeholders may be looking for. And it's trying to actually link the two. And especially with respect to the higher level picture, we describe in this paper that could be around business model and strategy, key financial KPIs and its analysis on how you're doing, key non-financial information and analysis of how you're doing on these, key prospects, main risks and mitigation strategies, key aspects of corporate governance. That all would be in the core. And then the more detailed information would then be residing, and that could also be financial information in the financial statements in the more, and it would also be, for example, ESG data or country-by-country reporting or governance-related information such as remuneration reports would clearly be in the more. So I have to point out, there's one thing also that came up in the conversations, that in fact the core and more concept in itself obviously does not reduce reporting burden. It only actually tries to link it in a more structured and logical way. So what needs to be reported is still decided as it currently is, obviously as it is, by regulators and by standard setters. So we hope that by connecting all of this, and connecting it in core and more. What is currently unconnected, it will become more obvious that some rationalization and streamlining and reducing of reporting burden is needed. But that's still for the standard setters and the regulators to pick up, and I'll come back to that in our call for action, because that's what we're addressing there. A brief word, I mentioned integrated reporting, core and more and integrated reporting. We got a lot of questions on it. Let's first say that integrated reporting has really been a major catalyst for change and to achieve global acceptance of value-driven reporting. Very positive. I think if you look at our discussion of core and more, and you look at the integrated report, we both embrace this more holistic and coherent reporting concept. And therefore, we never saw it as core and more discussing anything else. It is actually very consistent with the integrated reporting thinking. And our emphasis in the core and more discussion is perhaps a bit more on a focus on presentation and how you link the different strands of reporting, whereas integrated reporting is maybe more focused on the integrated report itself, on the core, and on the discussion of the content of, for example, the 6 capitals. But we believe that the IASC has really made tremendous progress. I think they have been lauded for that over the past 5 years. And we very much also encourage the IASC to continue its active engagement with stakeholders, as they're doing at the moment, to further develop and fine-tune the framework, as they are currently doing, as I say. And I'm really pleased that Richard is here today. He will be speaking later. Richard, thank you for being here. I know that you even had to reschedule some of your travel plans to be here with us, so that's much appreciated. Technology, as in our initial paper, we continue the debate we continue to believe that technology is going to be the driver and enabler of change. I said that. We need to start thinking now about the consequences of technology, the opportunity that technology provides. And this is quite difficult because no one knows exactly what technology will take us next, but we know that it will actually affect the presentation, it will affect the reporting, it will affect also from the user side how they actually consume information. So there are many aspects where technology will bring change, including the possibility to analyze a huge amount of data itself by users. So we're giving a bit more of an expansion in this paper, but the most important thing is that we commit to do further research on technology, because I think we're still at the beginning of debate rather than at the end. In the call for action, I mentioned that we released a call for action. That is really about the next steps, in addition to the paper. We want to contribute to the debate, we want to convene and to stimulate thinking, but we also are acutely aware that we need a concerted effort from everyone here in the room to make change happen. And in particular, our regulators and standard setters have, in our view, a key role to play in that. And that's what the call to action relates to. It is a call to the regulators and the standard setters. Some of our suggestions, more concrete suggestions, are, first of all, that we need to facilitate further experimentation. And what we have put into the new paper is maybe we should actually investigate the establishment of a corporate reporting lab at an EU level. Inspired by what has happened in the UK with the financial reporting lab. We will actually hear from Phil Fitzpatrick later today. And that may be something where we can learn from, because it actually provides an environment where users of corporate reporting can experiment with the providers of corporate reporting in a relatively safe environment, and where best practices can be developed and then be shared. So it is something certainly that we can look at and see whether that could actually work also at a cross-border level in Europe. So that's one suggestion that we make in the paper. And the other, in the call for action, as I said, to regulators and standard setters, is a call to stop the proliferation of reporting requirements and recommendations, to really coordinate efforts, preferably at a global level, to reduce the existing reporting burdens on companies, and to come up with a sort of a roadmap on how we can bring this together. And well, the first step is cooperation, and we know that the corporate reporting dialogue, where we will hear more about later from Ian McIntosh, its chair, is already doing that. So there is already a level of cooperation, but where do we take that? More coordination to streamline existing frameworks, and finally some consolidation, maybe in a global principle-based framework for corporate reporting and NFI reporting. So last comment, we are very positive also. We know that Hans is speaking next, that the IASB, Hans, has taken up a discussion around the wider corporate reporting, and you will tell more about it in a moment. In our view, a more prominent role in the broader corporate reporting would allow the IASB as a global standard setter to stay at the forefront of these developments and to maintain the relevance of its standards as well. I have no doubt that financial reporting will always remain a cornerstone of the information provision to the capital markets, but it is clear that there is a much higher demand also for more and different information from the users, and it is important that we move together into that broader world, and a global solution is needed. And in order to, for whoever takes it on to feel confident, I think you need to have the mandate from the regulators and from the legislators behind you to feel that you can actually do it. And that is what happened with international accounting standards and IOSCO. I hope that we can see something similar on the corporate reporting front. So the piano hasn't started playing yet, so I think I'm good. Wim, or maybe you're cutting me some slack. But that was, all I had by way of introductory remarks. I hope that I would all encourage you to read our latest paper and the call for action. And I hope that, by just giving you kind of the first overall picture, we have set up some of the themes that will be coming back during the discussion today. And I look forward to how our speakers react to all the topics that I've covered. So with that, thank you very much, and back to Wim.
Thank you. Fantastic. If you can just stay here for 1 minute. I heard you talk about, the further integration efforts that you encourage, that you recommend, the role of the standard setters. And hearing all that, I was thinking that's all great and fantastic, but you, as Accountancy Europe, are the ones who introduced the core and more concept. Yep. So what about the role of Accountancy Europe and accountants more generally, maybe? Can you say a few words on that, how you would see that going forward?
Well, I think, we clearly, as I said, we have a big stake because, our future is linked to whatever the corporate reporting model is and whether that remains relevant. And if people, as somebody, we can have a discussion today, but say that, we need to move, then we, as a key stakeholder, want to be part of that discussion. I think if you look in the past on how major corporate or reporting developments came about, the profession has always been one of the parties at the table to help drive some of the change. And I think that was true for international accounting standards as well, coming from the 70s up to where we are now. But clearly, we can convene, we can bring parties together. We are, the people somehow in the middle between the preparers and the users. So we have a natural convening ability. But in the end, it's other parties who actually need to take the baton and run with it. That's not us. Right? We will clearly always express our view on what we believe is relevant, how we can improve. And ultimately, we also have a role to add confidence to information. And so we have a role to play in the insurance space. So as we move into the broader corporate reporting, we would also look whether, if investors feel that that's the most relevant information, see whether there is a demand for our assurance services.
Right. And if, as you suggested, financial reporting, financial accounts specifically might move into a more report, wouldn't you be concerned that that's becoming downplayed too much and becoming too less relevant also from the accountant's perspective again?
No, I'm not worried by that, because I think actually, especially if you're seeing it in a technology world, right? I think people will just be, having access to whatever information is that they're looking for. And I think for some people, the more detailed information is more important. If you're actually trying to, fill your valuation models, you probably, will still cherish your very detailed information in the financials. Similarly, on sustainability information, I can see. So I think relevance is dictated by whatever user you're talking to. But in my view, we cannot actually, try with one report to cater for everything. That's why we probably need to have, that kind of dispersed model, but connected.
Okay, good. Thank you very much. Mark Vaessen.
Okay, thank you.